the best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for a special on-the-go episode of Under the Radar with me, Chua Tian Tian. Now, earlier this year, we shared with you that we'll be bringing you some of the on-the-ground reporting of key business events, launches, features, or developers' days under the Radar Specials banner. And now I'm fulfilling the promise we made by bringing you insights from a key business event that is said to be the equivalent of, get this, a Taylor Swift concert in the world of finance. And yes, I'm talking about insights from the 2025 Berkshire Hathaway Shareholders Meeting held in Omaha in the US on the 3rd of May. Now, you might have by now figured that I traveled about 50 hours just to catch a glimpse of Berkshire's chairman Warren Buffett at the start of the month. And yes, I paid for all the expenses and took a week of vacation leave just for this one. But hey, I'm not there at Berkshire's AGM alone. There is someone who's equally interested in the nuggets of financial wisdom the Oracle of Omaha has to offer. And he is none other than Willie Keng, founder of DividendTitan.com. And Willie joins me right here in the studio. Willie, welcome. What a trip.
Thank you, Tian Tian, for getting me on the show again.
And you know what? It turned out to be perhaps one of the most important shareholders' meetings in Buffett's career, as he announced his intention to retire and for Vice Chair Greg Abel to succeed him by year end. But first, Willie, let's turn the clock back to about 4 a.m. or 5 a.m. local time in Omaha on the 3rd of May, the day of the actual shareholders' meeting and Q&A. What were all of us doing then?
Well, I will say that I woke up at 2:45 a.m. local time, Tian Tian, and we were all really excited. I mean, tired, but we were all really excited.
You know what? I actually have to tune down Willie's mic because he's too excited. Too excited. You woke up at 2:45. I woke up at 3 a.m.
Wow. So we woke up roughly the same time, and we were all excited. I mean, tired, but we were all just looking forward to the entire event. Like, there was this adrenaline rush, and it was interesting because this year we actually found what I call a secret passage into the CHI Health Center, and that was actually a shorter route. So if
Really?
Yeah, so if you'd like to actually find out more about it next year and you want to go, do let me know and I'll sort of review that little secret. So it's a queue or a corner where you can actually queue up, and the queue is actually shorter. It's actually found at one of the multi-story car parks.
Huh. Okay, I know we have talked a lot about getting to the shareholders meeting. We've gotten a bit ahead of ourselves, but what we were actually doing at 5 a.m. local time in Omaha then was queuing up to go into the shareholders meeting. It's a long wait because doors only open early in the morning. So let's have a listen to this recording done in the early hours of the 3rd of May. Well, it's about 5 a.m. local time right now, and we're waiting in line to get into the CHI Health Center for the shareholders meeting and the Q&A. And as you can imagine, there's a very long line already, and we still have about 2 hours wait to go because doors open at 7. The temperature right now, 6 degrees Celsius, so it'll be a very cold wait, but the good thing is we've got our hot coffee with us, so all's good. Day 2 of the shareholder meeting starts at 8 a.m. and ends at 4 p.m. local time, and there are 2 Q&A sessions, one from 8 a.m. to 10:30 a.m. and one from 11 a.m. to 1 p.m. Now, there will be a drawing at 7:45 a.m. at each of the 11 microphone locations for those wishing to ask questions themselves. Now, at the 8 a.m. session, Warren Buffett as well as Greg Abel and Ajit Jain will be available to answer questions. And at the 11 a.m. session, Warren Buffett and Greg Abel will be available to answer questions. So let's see how that goes. Well, we didn't manage to ask questions, did we, Willie?
No, but Tian Tian, if you ask me if there's one thing which I've always wanted to ask Buffett, and if I had a chance to be on the podium, it will be asking him, what is the most memorable thing he has taken away, after living for 94 years old. I mean, he probably has accomplished so many things in life, and I just want to find out from him, if I could.
My question for him was the top 3 priorities for Berkshire as he passed on the baton. And I actually went down to one of the microphone locations to draw lots to speak to Buffett and was selected as a backup.
Wow.
So I was scheduled as the 6th person to speak from microphone 10. As you know, there are 11 microphone locations, and Buffett starts with microphone 1, 2, 3, 4, and so on and so forth. He addressed questions that were sent in as well at the same time, so there just wasn't enough time for everyone to ask questions. I don't think we even complete 2 rounds around the microphones. But we all know what the biggest headline was, and that was announced right at the end of the shareholders meeting with only 5 minutes to go. His intention to retire at the end of the year and that Vice Chair of Non-Insurance Operations, Greg Abel, would succeed him. Now, hear from the man himself.
Greg should become the Chief Executive Officer of the company at year end.
Hey, Willie, got to say that I was really shocked, and I think a lot of people in the same meeting were shocked. And it was an arena with 40,000 shareholders in attendance. And that is despite the fact that Abel's ascension was known as early as back in 2021. Did you see that coming?
I mean, I was surprised by his announcement, but I kind of expected it. I mean, Tian Tian, he's 94 years old and Munger lived till 99 years old. So that it could be anywhere over the next couple of years.
Yeah.
I mean, I didn't expect that to see it coming so fast. But, you know, I would understand it because it's not, number one, it's not easy to actually remove the reins, from yourself, to management. But on the other hand, I think he also wants some form of smooth transition and to be able to see how his managers are coping independently from the side. So I guess this is something which is to be expected for. And I'm really glad that it actually happened at least sooner rather than later.
And talk about a smooth transition. Going forward, Buffett did emphasize that he remains committed to the firm. So let's have a listen to this one as well.
I have no intention, zero, of selling one share of Berkshire Hathaway.
Well, Willie Buffett has remained firm that he will not sell a share of the company that he built. His comments were met with an overwhelming response and a standing ovation from shareholders. But how did investors react with their money the following Monday, given how Berkshire shares closed last Monday, which was the first trading day after the announcement, about 5% lower?
Yeah, I mean, if you look at shares of Berkshire Hathaway, both the A and B shares actually briefly sold off. I guess investors were mildly disappointed by the fact that Berkshire will eventually have to give up his reins to his managers. But on the other hand, I mean, if you look at how it is, the sell-off isn't really that great because if you look at how Berkshire Hathaway has been built over the last 60 years, Warren Buffett has made it into a cash-generating machine. And I believe, him being an investor who looks for great businesses, he also wants to make sure that Berkshire Hathaway is well systemized, is able to run by whichever manager is handling the reins. So I guess in all, I guess the market generally for me is still pretty optimistic on Berkshire Hathaway and how the transition will be like going forward.
And we do know now that Warren Buffett, he will remain as chairman of Berkshire Hathaway. But really, in your opinion, what will Berkshire Hathaway look like as it ushers in a post-Buffett era? Do you think the Buffett effect will be eroded away in the longer term? Or perhaps the question in the first place is the Buffett effect priced into Berkshire's share price today?
It's very interesting because a lot of people have been talking about this and this is nothing new. And Warren Buffett, if you look at the AGM, he actually likened this transition a lot like Apple. Between Steve Jobs, how he has built a visionary business and how Tim Cook has taken over and built into a successful operational company. I think Warren Buffett is also trying to do the same thing. Now, it's very difficult to replicate another Warren Buffett. I mean, Greg Abel definitely cannot do it, but I think what he's going to do is he's probably going to make it a lot like Apple, where he has really laid a foundation for Berkshire Hathaway. Post-Buffett era, you will probably see a difference in how the business will be operated. Unlike Warren Buffett trying to find great businesses, right price, and big compounders, I think what he's going to do is he's trying to make Berkshire Hathaway fit to the mold of how Greg Abel's expertise and unique strengths are. So one little hint here, if you see Greg Abel, his background previously was in utilities and infrastructure. I mean, he was previously from Mid-American Energy before Berkshire acquired it. So you can see where the decisions will be eventually made going forward.
And, let's talk about some other highlights out of the shareholder meeting. The other big headline of the day was Buffett comments on tariffs made at the start of the shareholder meeting. And this was important because if we go back to Buffett's shareholders letter out in February, there was no mention of tariffs. In fact, we heard very little from him with regards to tariffs ahead of the meeting. So, to this end, the value investors said this time around that, quote-unquote, trade should not be a weapon. What do you make of that?
It's very interesting how Warren Buffett's perception towards trade balances has evolved over the years. I mean, he did talk about how the US economy has changed over the last 250 years, coming from an agricultural-based economy to one which is an industrial economy, and now it's more knowledge-based, more technology-intensive a kind of an economy, which means that trade balances are actually more important, but from a different approach. Rather than trying to figure out and becoming the biggest export economy today for the US, I think Warren Buffett actually points out that he's trying to let other economies trying to play that part. And he feels that trade balances shouldn't be a zero-sum game. I mean, if you look at where the US economy is, it's evolved over the years. And it doesn't mean that having, outsourcing trade and exports to other countries doesn't actually come at the expense of the US economy. And as other countries prosper and grows in terms of its manufacturing, its exports, so too the US economy will be as well.
So it's all about the economic 101, right? Comparative and absolute advantage. But what were some of the other highlights for you this time around, Willie? Because I understand there were some questions on Berkshire's record cash holdings, capital deployment, also his take on market volatility. What resonated with you the most this time around?
I think it's definitely the cash holdings. If you look at Warren Buffett's Berkshire Hathaway, 5% of their cash, he takes up about 5% of the entire treasury market, and he's owning more and more cash today, which is really a good problem because this shows that his investments have been working over the last 60 years, and he is, no doubt the oracle of Omaha. However, if you look at how the size and the enormity of the business is today, it's getting more and more difficult to invest in such companies. Why? Because if you have $300 billion worth of cash and you want to deploy into investments, you can't just be buying very small companies. And even then, if you need to buy big, large cap businesses, it has to be able to move the needle. And it's not that easy in today's market environment to be able to find such investments. And I think this is a big headache for Warren Buffett and how he will have to deal with the cash going forward. And I think this is something which personally for myself, and I'm pretty sure many other investors are also closely watching going forward.
I think the question is when Greg takes over the reins, will he actually give out a dividend? Right. Does that resonate with you as the dividend titan?
Oh, yes. I mean, for me, I think there's a high probability that Berkshire Hathaway in the future will probably pay out a dividend. A couple of reasons. Number one, the amount of cash which you're able to deploy into great investments is going to get more and more limited going forward. I mean, if you look at the large cash holdings, which means buying back shares is one way to continue to boost the performance of Berkshire Hathaway. But on the other hand, I think paying out dividends is also another way to reward shareholders. At some point, look, Warren Buffett has said before, if company managers are not able to find great investments or if they're not able to reinvest those capital at a good return on investments, then the best thing to do is just have to return cash to other shareholders. However, if you look at how Berkshire Hathaway's shares have been performing, it's been performing at a premium to its book value. So one other way or one other alternative is to reward shareholders with dividends. And this is something which I am really looking forward to it. So going forward, how this will evolve, Berkshire Hathaway, I'm not surprised if Greg Abel eventually would announce a dividend payout.
And, you talked about it's harder and harder to allocate capital in this day and age, especially with that cash pile under, Berkshire Hathaway's belt. And one of the recent developments surrounding Berkshire Hathaway is its recent trimming of stakes in Apple. And on the contrary to what's going on, Buffett said to Tim Cook, the CEO of Apple, who was in attendance at the shareholder meeting, that he's embarrassed to say that Tim Cook has made Berkshire a lot more money than he had made Berkshire. Your thoughts?
Yeah, I mean, if you look at Apple's shareholdings, a lot of people have speculated. First and foremost, the reason why Warren Buffett has wanted to trim off Apple's stakes, he did sort of hinted that it was because of taxes. He probably was afraid that capital gains tax might increase in the future, and as a result, he's trying to trim off some of Apple's stake first in order to have that some of that tax savings. There were analysts which also speculated that he sold off because the valuations of Apple have actually reached an all-time high. However, my personal take is if you look at how Berkshire Hathaway is, the top positions in its companies, Apple at one point actually took up about more than half of Berkshire Hathaway's top positions, which means that Apple itself is getting more and more concentrated. Now, as an investor, concentration is one thing, but you also want to make sure that you're well diversified. Yeah. And Warren Buffett probably was thinking about diversification when it comes to trimming Apple in this case.
Now, Willie, as we begin to wrap up the conversation, we started off talking about how we are traveling to Omaha to gain some nuggets of information, insights, and also golden nuggets of financial wisdom from Buffett. What were the golden nuggets that you have gained through this trip?
I think there's two big ones which I want to share. In fact, Tian Tian, I actually have a lot, but I'll just share two of my most favorite one. Number one, I think it's about being patient and having that emotional discipline. So Warren Buffett said this, which I will never forget. He said that Berkshire Hathaway, over the last 60 years has been through 3 major drawdowns. Shares of Berkshire had actually lost over 50% of its market value 3 times. However, Warren Buffett mentioned that he was unfazed by it. He doesn't really care about how the market thinks because at the end of the day, he feels that as the world becomes more complex, more complicated, the world also tends to make more mistakes as well, which means that there will always be more opportunities. And as long as the businesses which he owns doesn't change in terms of the fundamentals, he's more than happy to compound many of these great businesses for the long term. So emotional discipline and having that patience is something which is crucial. Now, the second thing which I really, really like, and this is a bit more towards principles that investing is doing the things which aligns with you and connects with you. So Warren Buffett mentioned about him spending 10,000 hours to do tap dancing. And he might actually do 10,000 hours tap dancing, but he might not be as good as the next person who has that natural talent. However, if you give him 10 hours to read through Ben Graham's The Intelligent Investor, he will have yield way better results. And I think that really caught on me because he speaks out to everyone saying that every one of us is wired differently. We have different strengths and talents. It's a matter of spending our lifetime trying to figure out where those strengths are and really capitalizing on it.
What stood out to me, not as philosophical or, financial driven, but was how he managed to live until 94 drinking the soda that he liked. And he mentioned it in that conversation as well. Do what makes you happy. So, Willie, I'm just going to stop you right there because we're moving on to part 3 of our conversation on the peripheral events and activities you can take part in as a Berkshire Hathaway shareholder, and that will be played out tomorrow. Once again, Willie Keng, founder, DividendTitan.com, and that was an on-the-go special of Under the Radar with insights from Berkshire Hathaway 2025 Shareholder Meeting in Omaha. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.